Well, as promised at the top of the show, we were speaking to Graham Briggs, now the Chief Executive of Harmony Gold, which today posted or mentioned that the higher gold price has pushed the company's numbers into positive territory in the March quarter. Joining me on the line now is Mr. Briggs himself. Graham, thank you so much for making time for us, albeit over the phone. But the last time we spoke to you, it was with regard to the accident that took place at your Doornkop mine, as well as the flooding as well at Joel. Clearly, those investigations have been conducted. Have you managed to find out what the flaw was there?
Yes, certainly we continue, Gugu. Thanks for having me on the line. Looking at the whole accident at Doornkop, it is still under the investigation of the DMR, and that will probably continue. From what we know, obviously we've started implementing actions, and not only ourselves, also those other companies in the industry who have similar situations would also look at those actions. On Joel, a issue of the bottom of the shaft and water. Water in the mining industry is quite an important factor because basically, I guess the ton of rock that you mine either takes 4 tons up to 10 tons of rock. So you move a lot of water, and we do have a power failure and a piece of equipment going down that can lead to flooding very quickly. But we've recovered from the Joel incident, and tonnages are back, and Doornkop is getting back into the 192 level after the development and equipping that we had to do there.
Graham, you've had a tough time, but you certainly are managing to do a good job at it, bringing the company back into the black. But you also are streamlining your business rather substantially. We saw the impairment on Stain. Are you looking to review Kusasa later as well as Doornkop in the near future, perhaps?
Yeah, Gugu, the areas that we've really managed to improve is we've got improving grade. We're at above 5 grams a ton at the moment. We've managed to control our costs to a great extent, and we've beaten inflation in all aspects of cost control, down in capital, down in corporate costs, and so we've really spent a lot of effort on getting control of all those issues. Now it's a case of getting production up. Kusasa, unfortunately, has had a very difficult time since the issues on labor. However, the morale is improving there, and certainly there are signs of improvement during the current quarter that we're in, and I'm not talking about last quarter. So there's certainly signs of improvement on that. We've got a new management there, so we're really looking at a lot of things, people issues and so on. But the labor issues are slightly difficult to get a grip on because you are dealing with sort of multiple unions and so on. But we're really managing to make a few breakthroughs there.
You mentioned that you're looking to increase productivity. How are you hoping to do so?
Well, we have already. If you look at the sort of figures that we've given, and we took over a sort of a 9-month period, so we looked at the 9-month period ending in March 13 versus the 9-month period ending in this March 14. And we've managed to improve productivity by 8%, and that's in a number that we've got as grams per man per month. So that is certainly showing improvement. There's various elements to that. One is obviously we've got slightly less labor than we had before. It's dealing with all the costs and really trying to improve a lot of things, right from the conditions that we work under to improving safety. I know that sounds bad in the sort of Doornkop thing, but there have been dramatic improvements in safety over the last while. So it's a multi-pronged approach, and on top of that, we've actually managed to reduce the average age of our workforce. So there are various programs there, but after many months and quarters of a trend of low productivity and productivity declining, we've managed to turn the corner, and certainly our objective year on year is to get it 10% and not 8%.
Graham, in this announcement, little mention is made of your assets in Papua New Guinea. Why?
Yeah, I think Papua New Guinea Hidden Valley has been performing very well in the last 2 quarters. It can potentially improve a bit more, but it's certainly been very pleasing, the turnaround at Hidden Valley. So that's ticking over nicely. And in Golpu, the project there, we have got quite a lot of studies going on. We did announce the latest borehole results. We've actually finished the 2014 season of drilling, and we're doing some studies there. And of course, we'd like to be able to present those to the markets probably in August as to exactly what capital, what sort of mine we're looking at, and what sort of production rate it's going to have. But you know, we have still got those studies in progress, so it's a little bit early to talk about them.
Just to close off with, Graham, your share price has no doubt seen better days. It's down by 13% year to date. How are you hoping to boost shareholder sentiment?
Well, I think there are various things. One is obviously having good control of those things we can control, like grade and costs and so on. We need to improve our production. We had a good return after the Christmas break on most of our units. The areas that we failed on those three assets, the Joel, Kasasa-Letu and Doornkop, those are sort of been well publicized now. So we need to get production back onto that level. We certainly have seen from the beginning of the year a quite improvement in the share price. And I think, you know, if you look at the sort of investment, if you invested in Harmony shares or gold, you'd have made more money out of Harmony shares. So we've certainly seen a returning trend to higher share prices.
Well, thank you so much to Graham Briggs. He's the Chief Executive of Harmony Gold.